Welcome to this report commentary with Sivers Semiconductors and their new CEO, Vikram Vatulya. Please welcome, Vikram.
Yeah, I'm happy to be here.
Happy to have you here. So before we go through the numbers of the third quarters, could you please give us a short introduction of yourself?
Sure. So I'm Vikram Vatulya. I have 25 years of experience in the semiconductors industry. I work for big companies as well as small companies, and I worked on small businesses and big businesses. And what's always been attractive to me is the intersection of secular trends and differentiated technologies, and taking that and making a growth business out of it that's profitable. So that's where I am, and now on this journey with Sivers Semiconductors over the last 3 months.
Yeah, great. So you've been with the company since 19th of August. How has the first month been?
Exciting. I mean, I only knew so much from the outside, and over the last 3 months, talking to my teams, talking to our customers, talking to investors, we have a pretty powerful story that's starting to take shape. It takes time, it takes commitment, it takes focus, but we have all the essential components, and now we just need that discipline to go continue executing and build this business.
Mm-hmm. Thank you. And if we take a look at the numbers of the quarter, your net sales amounted to 58.7 million Swedish kronas compared to last year's 58.1%. That's an increase of 1%. And adjusted EBITDA amounted minus 11 million Swedish kronas compared to minus 12.5 million the same quarter last year, improvement by 12%. What can you tell us about the background of the numbers here?
Sure. So at the end of last year, Q4, we had a phenomenal quarter. A lot of NRE revenues came in, and we had a very high number in Q4 that moved us up on a revenue basis. And in 24, we are digesting that growth and stabilizing there to lay the platform for the next segment of growth for us. And we continue our focus on profitability. So we have shown remarkable improvement in our adjusted EBITDA, and that's going to remain a focus in the upcoming 12-15 months as we start to get cash flow from our operations, our own profitability to a place where we start becoming self-sustaining. And so meaningful steps have been taken. We're digesting that phenomenal growth we have to put the platform for the next stages of growth and continuing our focus on profitability.
We're all looking forward to that. And product revenue improved by 24%. And you state in the CEO note that this is where you will be building your profitability for the future. Could you elaborate a bit more in detail how this will work?
So there is a transformative element to the company. The company historically has been an engineering project-based revenues company, and we're starting to transform to become a product revenue company. Product revenues are often associated with higher gross margins and profitability versus NRE businesses, but this takes time. But we're meaningfully adding the contribution of product revenues to our overall revenues over time as we carefully choose projects which have a line of sight to production and commercialization. So that's our commitment to the business at hand. And that transformation continues to happen and will still take place over the coming years.
And if we go through the two areas that you're working in, how would you be able to perform on the market of photonics?
I think this is an important piece of information to digest. For a small company, a company of our size, it's good enough to be in one strong secular trend in one market with one technology. We find ourselves in two markets with two powerful secular trends and with two technologies that are relevant. So on the photonics side, the big tectonic shift is AI data centers moving from copper interconnects to optical, which is where our photonics lasers come in. So that's intersecting the secular trend in the AI data center with photonics lasers that are highly differentiated. And on the other side, millimeter wave adoption is a secular trend happening across markets. But once again, we are choosing a market with tremendous momentum, which is satellite communications or SATCOM. And we have RF beamformer technology, which is what is needed in that application, both in the ground terminals as well as in the satellites above. So that's what I mean by we are taking the company's resources and focusing them in a disciplined fashion behind these two specific markets with momentum, with the technologies we have to solve our customers' essential challenges. So that's where our focus is right now. And that's how we're going to build this business up.
And if we move to the important events during the quarter, which are the ones that you would like to emphasize?
Got it. That's a good question as well, because there are some very key events that have happened in the quarter. On the one hand, if I look at my photonics business, a lot of our customer conversations are now moving from, does the technology work? Is there a product fit to my market? And they're now moving to, are you going to be ready when my customer is about to ramp in the next 18 to 24 months? Are you going to be ready? And so to that extent, when we look at our laser production, we are now finalizing a merchant foundry partnership who can produce our lasers at scale. That's an important period for us in the company. That's on the photonics side. On the satellite communications wireless side, we have had lead adopters like the customers we have, such as Allspace and Thorium, who are helping us with putting our technology into their products for the first rollouts. But now we have a blue chip customer win. This is an established customer, well known in the space. And this is often a transformation you're looking for, which is you have your early adopters, but at some point the technology and the product becomes compelling for mainstream customers to start coming in and saying, hey, how do I work your technology into my products? So we are our first blue chip win in SATCOM, which is super exciting for us. That means, we've moved past early adoption stage. And we're getting a lot more inquiries on both sides of our businesses from more established players. And that's a signal of also the company starting to grow up into moving beyond early adopters. Another component that was super interesting for us was the US CHIPS Act wants to fund what they call lab-to-fab technologies, which means take early stage technologies and commercialize them. All of US had 33 awards. The Northeast Corridor got 6, out of which Sivers landed 2. That's a phenomenal success rate. That means there's a lot of conviction around the technologies we have and the capability for commercializing that. And in these projects, we now get exposed to another segment that's very interesting for the future, which is electronic warfare. And again, there's a lot of opportunity for our RF technologies in there. And we're going to be partnered up with the likes of Raytheon and BAE Systems, who are the top providers in the industry for electronic warfare solutions. So these are 3 very, very fascinating pieces of information that firmly point us to, we have the technology that's intersecting momentum markets with strong secular trends. So that's how I would like to say Q3 was pretty momentous for us in that fashion.
And if we then come to the outlook, how will you be able to commercialize all these parts if you look a bit forward in time?
Sure. I mean, look, it's all about execution discipline. If you look at what's ahead of us in 25, there's definite dedication and commitment towards profitability. We're going to continue all the benefits we have done and build it into a pretty robust 2025, as I've taken stock of our opportunities, our profitability levels, and where we need to go. If you look at the longer term future, then let's take 2028 as a benchmark. The 2 markets that we are going into offer us in excess of $2 billion of serviceable available market for our technologies. And our ambition is to have a high single-digit market share in this space. And we have the right value proposition and our pipeline is expanding. So if you put these things together, you're talking about a $100 million plus business in that time frame. And then all you have to do is look at semiconductor multiples, and we're talking profitability levels of, let's say, 20-25% EBITDA, and you look at market multiples, that's a compelling market valuation for Sivers in that time frame. And we are steadily between now and then building up our profitability and our pipeline to have revenue momentum at a profitable, sustainable level as we build towards that ambition of ours by 2028. So that's how I'd look at it in 2 pieces. Near term, tremendous focus on pipeline expansion and profitability, and longer term, our aspiration on the share of the serviceable available market. That gives you the two bookends of how to look at Sivers over the next few years.
Very interesting. Thank you. That will be all the questions from me today. Thank you, Vikram Vathulia, for joining us today.
Yeah, thank you so much. I appreciate the opportunity.